Hello. Who's gonna do the intro, Kev?
I was waiting for you as usual, Pat. Yeah, it's Pat on the other end, and it's me on this end, Kevin Wadsworth, aka North Star, and Patrick Karim, otherwise known as Bad Shots One, of course, on Twitter. So yeah, hi everybody.
Hi guys. All right. So me and Kevin, this is like a podcast. We're gonna do a review of maybe a critical moment in the gold sector, US dollar, and just to see where we're at right now. So we're not even gonna wait. I'm gonna share my screen, and we'll try to guide you through what we see right now. All right, Kev, did you wanna start on a particular chart there?
Yeah, so if you just scroll down to the gold chart that I put on, I think it was yesterday, that's the one there, the gold big picture. I did a podcast and I put it on as a chart as well.
Okay, I'll back it up.
You don't need to press play on that one. I think it went on there as a chart yesterday. If you scroll down somewhere, it should be there. Then again, my memory fails me these days, so perhaps you do have to look at it on the. Yeah, I tell you what, I'm lying to you, Pat, as usual, aren't I? It's got to.
I know where you put it, Kev.
Just show the image from the original.
On Twitter.
Yeah, it's on Twitter as well. So, I mean, the point we're making here is that the current position for gold it's in a bit of a no man's land, really. As you know, we've bounced off the edge of the arc. And whilst Patrick's just trying to find me way down his list of people on Twitter, there we go. So gold has bounced off the edge of the arc and moved upwards quite strongly. So bounced somewhere, it was down below 1700 and then went up to around about 1900. Since then, we've come back and we're back testing that support and resistance zone around 1770 to 1830. That may well not hold, and the reason for that is because we've got a developing bullish wedge here that we need to prove one way or the other. Either it's going to build out and develop and take us all the way down into the 8-year cycle low in late 2023 or even early 2024. So that is one possibility. And so as a trader, as a chart trader and technical analyst, you set these possibilities and you wait for the price action to prove to you one way or the other. I think someone on, I can't remember if it's Twitter or the website, said, oh, so, bag holders have got to hold on for another sort of 4 years. Well, if you're a long-term investor in gold, my answer would be, this is all part of the process. You see how we've moved up from 1,050 all the way to 2,000. If we pull back to 1,600, that's a perfectly normal gold bull market sort of thing to do. So if we move above the 1,900 level, great, everyone's happy. We get a final push, a final burst, a rally during the second half of this year, and that will keep everybody happy. You can book some profits and then wait for the inevitable 8-year cycle low, which is coming up. And I must admit, that was my initial expectation. That's my sort of primary expectation, is for a strong rally during the second half of this year. I haven't written that off yet. We've got the quarterly close coming up, 3-monthly close, and tomorrow, that is Wednesday. So that's going to be really important, give us a lot of clues. And I think Patrick's got some more clues and information that he wants to share with us as well. So just watch that 1900 level. Yeah. It's a key level for breaking out of that pattern, and we'll keep you updated on the website, of course.
What I stumbled upon this morning, and when I was doing some of my US dollar DXY charts, and then I inflation adjusted. So the way, I know I'm not maybe supposed to do that, but the way I see it is, if you inflation adjust something, you're actually a currency. It's like you're seeing your true purchasing power, right? So anything, if inflation adjusted, it makes it like in real terms, but you could have divided maybe by any hard asset, and then you get its value. And then when I saw it, but it was inverse, so it's super hard to tell. So this is the US dollar inflation adjusted, keeps going down and down, and I had to put it on the log scale, because if you don't put it on the log scale, then it becomes unreadable because it fell so much. So I put on the log scale, and then I said, look at this chart. It's just going down. It kind of looks like the gold chart. So if you inverse the scale, and then by magic, and behind I have the gold chart in log scale, and holy Moses, man, it tracks it pretty sweet. So I might not be the first one to see this. I'm pretty sure a lot of people, they've seen that. So my clue as a chart trader is, when I see these type of relationships, how is this adding evidence to a possible continuation breakout for gold? How is, so if I see some bearishness in this chart right here for the US dollar inflation adjusted, it could give me some clues on what's going to happen maybe for gold. And I started drawing some lines. Kevin could probably tell me if you see anything out of the ordinary. But
Well, I always see arcs, I always see trend lines and support lines. So you're,
1, 2, 3,
yeah,
4. So this is a valid breakout we had here, trying to retest.
yeah,
Higher lows, higher lows. Now it's hitting resistance. So a pivot line test, broke out, false breakout, test from above, test from below. So here we got an important line, and it's no miracle that it just bounced on it. And at the same time, gold refused to do new highs. So I think this we're going to have some clues here. And remember ratio charts. So this is essentially a ratio chart. So it's the US dollar. If this goes up, that means the US dollar is underperforming inflation, but they could both be going up in the same direction, but inflation could be going down. The US dollar could be going down also, but it's just that the US dollar is going to go down more than inflation, and vice versa. The US dollar can go up and inflation just going to go up higher, because the proof, a chart you guys got to remember, is this one here. It's just a regular US dollar. I'm going to re-put a regular scale. So even here, the US dollar, even if it did new highs back in the 1980s, inflation adjusted, it couldn't make a new high. So that ratio kept going down and down and down. So for me, that's a clue right here. I'm just wondering, Kev, how this is gonna play out. This usually I call this like a bullish transition zone. And if you could bear
yeah,
with,
it is. You can, there's an uptrend line there as well, a support line, I think, as well. It might give you some indication as to where it might be headed. But yeah, we could have a back test on there that takes us, as I say, down into a possible cycle low, I suppose.
here's a 1-year moving average. Yeah, I could exactly, and that could be yeah, who knows? So we have to wait right now, see how this consolidation pattern below that breakout line is going to pan out.
See the 36-month moving average there. If you were to draw a support line underneath that with a straight line, they may both be heading towards a kind of an apex on a sort of a symmetrical triangle wedge formation. So that may be a point of attraction.
Around here?
No, sorry, I meant the if you draw a line right underneath all of it. Lower down, keep going,
Here.
from the keep going down, further down, keep going, going there.
Okay, so I see it now. My eyes were too close to the steering wheel.
That's the one.
Yeah.
That's the one. Yeah. So that support line and the
Here.
3-year moving average are all heading towards that sort of apex, really, aren't they? So I just wonder whether they might be heading in that general direction.
And 2022, late 2022, Kev.
Yeah. Yeah.
So anything that stays up above this line, for me, it's bullish for gold. But if it drifts sideways here until it breaks out, that kind of goes in line with your your bullish wedge there for gold, Kev. There, just consolidating slowly and drifting sideways until this resolves.
Yeah, it does. And when that happens, you need to look for a bullish pattern to form. So you can actually draw a bullish wedge in there, a sort of a theorized or imagined bullish wedge leading from the recent high there on the US dollar and draw it down to the apex. You end up with a sort of a bullish wedge or triangle. And that's something that often plays out. You see this sort of bullish consolidation towards an apex and then boom, off it goes. So it's just, as I say, there are a number of scenarios that you have to have in the back of your mind and your head that could play out, and then you look for the clues to see which one of those is the one that's actually going to play out. So
yeah,
it's evidence building. It's all,
yeah. So I'm going to keep an eye on that 1-year moving average, see if we bounce here.
Yeah.
If we fall through it, indeed, this scenario becomes more probable.
Yeah.
I think that's it, Kev. Like this is the main highlights there. Stay nimble and see what. But this kind of explains why gold has been stalling there. We're hitting U.S. dollar inflation adjusted. There's also stalling this important critical all-time, because once that breaks, man, this is the waterfalls, right? There's it's guys just again there. I'm just going to show you. Look at this.
If it breaks, it becomes an about the apex move or around the apex move, and they're not pretty. So yeah, that would be yeah, that would be bearish for precious metals if it were to happen. But in the longer term, it's not in fact, you could put an arc in there quite easily looking at it. So yeah, longer term, I don't really see a long-term bearish case for precious metals. Short term, as I keep saying, we've got the 8-year cycle low to contend with. So, you know, we can't expect precious metals to go up in a straight line. So
Yeah, right here, right? It's a perfect arc, actually.
yeah.
All right, guys, that's it.
Okay.
Don't
Good stuff.
forget northstarbadcharts.com, guys. All this stuff is all there, and happy for everybody that's a member, happy, and the future members and even non-members. There, we wish you good luck. Ciao, guys.